The big picture is that volatility is here to stay. I mean, we've seen in the past few months big sell-offs, and we've seen the emerging markets index fall, 15% over the past year. It's fallen about 25%. So within that context, there's lots of value. So that's why we're seeing, good stock picking opportunities in the small caps, especially. We're also seeing, I guess, an increasing dispersion, and that's a crucial thing because it's associated with volatility. So what that means is that there's a bigger difference between the winners and losers. When there's a low volatility environment, the market as a whole just moves different ways in stocks. There's not much differentiation between the stocks. So stock pickers like ourselves can really experience outperformance when there's higher dispersion. And I guess it's less important buying an ETF. It's not really worth your money being in an ETF or a market-related fund. When there is increased volatility, we're seeing stocks that have higher operating leverage really suffering at times. Like we're seeing some of these contractors where there's high fixed costs, high proportion of fixed costs. We're seeing, in one case, RCR Tomlinson, we saw it go broke. We're seeing other contractors really suffering from higher labour costs, like Boom Logistics and Macca, and we saw a cost blowout at the big end of town in one of the projects of Lendlease, one or two of the projects of Lendlease. So the stocks that are remaining in operation, like Boom Logistics, Macca and Lendlease, we're actually seeing really good value, because if they can weather the storm, these companies have strong balance sheets, they've got diversified earnings, and basically, the operating leverage can work for them. So you can make big money from them if you're buying at the right price. The buy stock we've got is actually a classic kind of big company in a small capitalisation. So Austal Ships, for those that have sort of been involved in under the radar, we've been a supporter of for a long time, but this stock certainly is starting to experience a renaissance in its share price, but its market capitalisation of less than 700 million is arguably too small for a company that's a key cog in the US Navy military machine. So they are a preferred supplier to the US Navy. They're getting they're getting orders and increasing orders from the US Navy. They're also increasing sales on the commercial lines. So this stock, I think, is definitely good value. Village Roadshow, we're arguably too early into that stock. They've had sustained problems following the Dreamworld tragedy 2 years ago, and we underestimated that. But the stock has bounced from under $2 to $2.50. So following that bounce, we're still confident in the company because the operating earnings are improving and the balance sheet has improved a lot. It's just that it's going to take a bit more for the sentiment to improve. That's why we're holding that stock. Well, you've got to know when to hold them and you've got to know when to walk away. And walking away is something we certainly did a lot of during the bull market. So we took profits in a lot of companies. In our last issue, we covered like 21 of them where we made some really good returns. And we're really happy with that. And what we're also happy with is seeing some of those stocks where we've taken profits in come back to levels where we think they're buys. A couple of those stocks include Freedom Foods, which has fallen 25% or more in the past few months. This is a well-run sort of family-owned or majority-controlled company. They have great niche in allergen-free foods, and they've got markets in Asia and America that are growing. So we like that stock at current levels. Another stock that we like is Kogan. That is Australia's premier online retailer. I mean, basically, sentiment hit that stock badly after they had some profit downgrades and some director selling. But we think, the underlying metrics are good with 50% sales growth, and we think, there's a buying opportunity, but the volatility will not go away. That will continue to be a volatile stock. Well, in the Christmas hamper, we've got like a buy recommendation coming up this week. So it's going to be like an early Christmas for Under the Radar subscribers. We've also got like a number of stock recommendations that we're working on in the pipeline in the Christmas stocking. And we've had a great response, having spoken to a number of fund managers for our round table, like Jeff Wilson and Carl Siegling. So it's really interesting times in the market. So I promise it's going to be interesting to hear what these guys have to say.